Traders, Cousin Benny coming to you from closingprint.com on March 1st, 2020. In this edition of our weekend video newsletter, we'll discuss the indices, all of which are at extremes and ready to bounce. In the short term, we just need to see conviction buying by institutions. All of the FANG stocks and additional tech stocks that we watch very closely are much lower last week at extremes. They also look like they're going to bounce this week, with the bond stock ratio at an extreme and bearish presently. Needs to reverse and move in the opposite direction. HYG and junk had a huge bounce last week. Those have started to turn more bullish. The Dow Composite is off over 16%. The S&P 1500 is resetting. It's on a sell signal. And XII, the ARC Institutional Index, produced numerous red sticks last week at the 200 period moving average at the close. Tick and Tick Q continue to move lower on the 60-minute. We need to see that turn back up and turn green. NYMO and NAMO are at extreme lows. We hit minus 158, an extreme level we haven't seen since the 2009 lows. Breadth thrusts also hit extremes. The last time we hit the levels that we saw last week was for the December 2018 reversal, and you get the point. All of these are very extreme and should bounce this week. S&P equal weight index produced a hammer. We did see the put-call ratio extremes, etc., etc. AGG bonds are all at extreme highs. Those should come back in, with the 10-year yield hitting a new all-time low. We have the US dollar fading for the last week and a half from the recent highs. The yen had a huge bounce as well, and the British pound US dollar is in a wedge pattern, continues to fall, even though the London Stock Exchange was off over 10% last week. Gold, the safety trade unwound on Friday. That was a big drop. We also saw copper pull back. That's at a potential double bottom. And West Texas crude had a bearish drop last week of over 16%. The heat map is bearish at extremes for both the S&P spider sectors and the international markets. We'll look at some IBD50 names that have the potential for a bounce and a follow-through on Monday and Tuesday through this week. In addition to some MarketSmith Growth 250 relative strength names and some stocks from the top 20 volume% gainers list. Bukowski is showing 505 green with a CPI signal red since February the 19th, moving from 20% to 31.1%, improving but still bearish with 6 bearish patterns, 0 bullish patterns, and 11 patterns waiting for breakout. That's the most oversold we've seen from Bukowski's since December of 2018. Bottom line, we're cautiously bullish, we're at extremes and oversold. We just need to see confirmation on the bounce, buying, and some above average volume from institutions. So look forward to a follow-through on Monday and Tuesday. Despite the sell-off, we did see growth stocks outperform value in this upper panel. IGX versus IVX continues to climb. So those stocks, like the big cap tech names that we follow, did outperform. We saw a much larger bounce in the growth stocks in the upper panel versus value. Buyers stepping up towards the end of the day on Friday, with the growth stocks bouncing well before they reached the October lows. So the potential here is for a 3-candle reversal. We'd like to see a move above 1850 on Monday and then a close somewhere around 1900 or higher to complete the pattern. While the spiders retraced all the way back to the October low, tagging that level, giving back over 19% in the process. That took 5 months to achieve. We pulled back in 8 days. Extreme oversold readings on RSI. Volume was massive last week as well. We're still looking for MACD to bottom as a function of price. So we could see that as soon as this week, if we do have that 3-candle reversal, would be back above this 618 level and the breakout zone potentially this week, where the recent rally started from the October reversal. Because options were so expensive on the S&P, last week we decided to go with the SPXL Direxion 3-time bull shares, S&P 500 3-time bull shares. We bought that near the lows. You can thank Lee Star for that observation. He happened to mention that Steve Hammer saw algos in Darkpool buying of this particular asset. So we jumped in and managed to close at the highs of the day on extreme volume with the potential for a V-shaped recovery. We also saw a really nice bounce and buying towards the end of the week on Friday, closing higher, giving us a weekly reversal candle. Looking for price action to move back into this range this week. RSI to turn back up as institutions look for value going into the first week of March. This is a really nice looking chart of the small caps IWM Russell 2000. Last September and October, we looked at this same level to buy. We did do that on Friday. We nibbled. We started the position in IWM looking for this weekly area to hold. As investors jump back into the markets, potentially this could reverse and start to head back up into the top of what looks like a big range over the next several weeks and months as institutions become a little bit more bold into the seasonally strongest months of the year, March and April. In addition, looking at some of the extremes that were observed last week, we added one that Martin Pring shared with the community last week, which was pretty interesting. When you compare the ratio between the VIX and the 10-year yield, you wind up with the resulting chart that we see here, which registered the highest levels ever recorded. These extremes can't possibly continue, and if you overlay the NIMO, which hit minus 158 last week, you can see that these have moved in opposite directions to such extremes that the potential for a reversal with the added effect of driving this VIX ratio even higher. I also saw some interesting things when I was updating this S&P 500 monthly chart that goes back to the 1980s with the Black Monday drop of 29% back in October 1987. Starting this particular analysis, we saw a 617% gain over the life of this particular secular bull market, while we're only at 408% since the 2009 lows up to the recent highs. That gives us a trend line that's right below. So we're watching how this trend line plays out this week. A bounce off of this area would help us breathe a sigh of relief, to say the least. And a loss of this trend line would lead possibly to some pretty significant downside, knowing there's a potential for a trend break if the coronavirus becomes more severe and outbreaks accelerate in the United States. The bond stock ratio had a huge spike last week, of course. Over the last couple of years, we've seen these type of spikes and look for extremes and a reversal in the next couple of weeks. We'd look for bonds to pull back as well and for the 10-year yield to bounce. The latter reaching an all-time low last week, closing at 1.27%. We'll look for that to reverse this week as well and start trending like it did back in 2012 and 2016 to mark a reversal with the 10-year yield as well. We also saw high yield corporate debt bounce last week. This is bullish. It's remaining above its longer term moving averages and showing signs that investors scooped up this particular investment last week. This is a risk on indicator as well, while junk bonds showed us the same type of reaction. If this continues to move higher, this would be an indication as well that we should see a bounce in the equity markets. With that in mind, we should see bonds like AGG, which we have a position in, pull back a little bit as well. As the safety trade unwinds a bit, look for these investments to return to mean with a potential to trade TLT puts this week. We'll keep an eye on that with the idea that this could retrace all the way back into this range. Over the short term, we could have a left shoulder, head, right shoulder, inverse head and shoulders type of pattern setting up. TLT is overbought, so this could go on for a bit longer, but we'll be watching nonetheless for a potential reversal and maybe take some puts on the TLT. We also saw the potential for the US dollar to cascade lower. I didn't think it was going to be this quick, but this is another indication that the safety trade is unwinding as the currency markets dwarf the bond markets, which in turn dwarf the equity markets, the S&P 500, NASDAQ, etc. So look for this market to give us more signals. Looking for this to continue to move lower this week, which also should have an impact on commodities. Commodities like copper continue to trade in this descending channel pattern. We're looking for a bounce, a double bottom of sorts on the daily time frame. At the same time, we're watching for crude oil to bounce. You heard the U.S. petroleum reserves might be accessed if the crisis becomes even more profound. Look for USO, West Texas, and Brent to bounce, which looks like a much larger range now if we take these lows going back to 2017. So we are anticipating a bounce this week. However, at the same time, gold also pulled back dramatically on Friday, down 4.61%. We thought that the safety trade might unwind. I didn't think it was going to be this fast. It did manage to hold right at the 50 period moving average, so there is a potential this could bounce. If it starts to fall a bit further Monday and Tuesday, that would indicate more of the safety trade unwinding and more potential for the equity markets to follow through back up to recent highs. Sectors also reversed from lime greens and greens to all red last week. You could see all of the zeros we have here, and that was across all sectors. We also saw the international markets move from yellows and lime greens to red as well. So the visual change that we need to see this week would be more yellows and lime greens again to show that transition back to a more bullish stance. The takeaway is that all of the sectors were much lower. However, you can see that technology didn't pull back as much as some of these other sectors did, in addition to what we saw in the communications sector and consumer discretionary. So these extreme oversold readings are also giving us reason to believe we could bounce, with the technology and communications sectors faring the best. Here is the IBD50 list. This is the 5-minute charts showing how most of these stocks moved higher at the end of the day. So institutions were buying up shares towards the close, hoping that many people didn't see it, of course. So either shorts were covering heavy on Friday, or institutions, or maybe both, were picking up some technology and growth names to start the week, getting an advantage on Friday. Many of these look very strong in the last few minutes of the trading day. Alterex with a close back above the 21-day moving average, RSI's rising, volumes increasing, momentum has shifted and is moving in the opposite direction. We could see a follow through this week. We'll look for that confirmation on Monday. We also saw a nice bullish session on Friday for BABA. We're looking for that to get back above the 21-day moving average, RSI to rise. Volume increased dramatically above average, creating a pocket pivot in the process. On Friday, looking for a reversal over the next few days. Team Atlassian also giving us a very similar look. Reversal, bullish engulfing candle, engulfing the body of Thursday's price action, looking for a move back above the 21-day as a minimum If it gets rejected here on Monday, we would look for price action to remain below the 21-day. If we close above, look for that confirmation to push us back up towards the 52-week highs and for RSI to rise in confirmation. Volume to increase would be an additional plus. We're also looking for BlackRock, which had a nice 4.5 months of bullish price action once it got above the 200-pair moving average. For that to move back above the 200 this week, as RSI is oversold and turning, most likely. If we do get a 3 candle reversal on BlackRock, that might be a nice opportunity for a longer term swing. Booz Allen Hamilton also was showing potential at the 200-period moving average. This security company that works for the federal government, everyone knows Edward Snowden, he used to work here. Looking for this to turn back up, oversold and rising. Move back above 50 would be confirmation. We'd need to get through the 9 and 21-day overhead over the next several weeks. Brown and Brown showing us a hammer. There's a potential for this to continue higher as well. RSI is nearly oversold. Look for a reversal in many of these extremely oversold stocks coming into this week. Many of the REITs also look like they may have potential for a bounce as well. Dexcom looks pretty good, holding right at the 21-day moving average. RSI didn't get below 50. This is one of those higher probability stocks. We saw a buyer stepping up at the 21-day as well. So if we see a bullish day that gets above the 9 EMA, this is set up to move higher, showing relative strength. Dropbox also faded after earnings, given the bearishness of last week's price action. If this gets back above the 200-period moving average, this is telling you to look for more follow-through. This might be a nice setup for a fairly inexpensive name for a longer-term swing. Now that the markets have reset, we'd probably look to start some swings in the short term. That said, we will start all of our trades this week. If we take anything as a day trade, it needs to close in the upper half of its daily range to continue with a swing into the next day, maybe sell half and swing half if the stock continues to move higher. Some of these healthcare stocks like Edwards Life Sciences producing hammers, those could reverse as well. Emergent Biosolutions, this was a very interesting stock. I hope that this gives us an opportunity and doesn't pop too fast this week. This company develops vaccines and therapeutics against biological agents that are potential weapons. Interesting as it relates to the coronavirus, of course. Looking for this big cup pattern to follow through, a handle in this area, and then a breakout, with the measured move being the depth of the cup up to the top of the lip, representing about a $25 to $30 measured move on top of this. So potentially 100 over the next several weeks and months if we do see a cup and handle continuation pattern. Floor and Decor, if the builders and construction group continue to push higher. This one produced a hammer. There is the likelihood that it could continue higher this week and get back above the 21-day, which has an upward slope. We look for a follow through in the next few days. Innovative Industrial Properties. This company buys and leases properties to the cannabis industry group for the growth of medical marijuana and cannabis. Holding right above the 200-period moving average. A nice pullback opportunity if you like trading this one. I know a number of you in the room have traded this in the past, as well as myself. Looks like a very large cup pattern, which is a bit easier to see on the weekly time frame. Relative strength is at 89. We can see annual sales and earnings continue to grow as that industry over the next few years. We would expect to see this trading back up near the 140 level in the short term. That's a $50 move from the current close. Some of the chip stocks like KLA Tencor, CLAC also moving higher last week. Back above the 200-period moving average. Massive volume on Thursday and Friday, showing that institutions are picking up shares. We also saw something similar on Xilinx with a pullback to the October 2018 breakout level, giving us a reason to believe a lot of these stocks are on institutions' radar. Xilinx did bounce at the 200 period moving average on the weekly time frame. It's in a descending channel, so in order to get more bullish, we need to see a move back above the 21 weekly. In the weeks to come, RSI would need to continue higher. Looking for Xilinx to bounce, and a lot of the other chip stocks as well. So watch NVIDIA, for example, AMD, Intel for potential entries on the oversold conditions that we were presented with last week. Lumentum Holdings, a nice bullish engulfing candle just above the 200 period moving average with RSI rising and volume confirming institutions are interested, as this company provides optical communication photonic products for manufacturing, inspection, and life sciences fields. Got some pretty decent annual sales and earnings. This weekly time frame showing the moving averages catching up to price action. We're looking for a bounce at this pullback to breakout zone. The company having announced a 33% beat in earnings last quarter to entice institutions in buying more shares. Netflix also representing a potential buy. We saw buyers on Friday pushing price action back up towards the 21-day moving average, almost closing above the 9 EMA. Look for a follow through this week on above average volume and for RSI to turn back up as a function of price. While NBIX, a new stock on the IBD50, printing a bullish engulfing candle. This company develops novel therapeutics to treat endocrine-related and neurological diseases and disorders. Looking pretty interesting with a big cup and handle pattern potentially. If we start to head back towards this 100 zone, look for a breakout and a move to the upside. Annual sales and earnings projected to almost double from 2019 to 2021. In addition to some of the other companies that we've seen action in last week, Novavax and Codex, to name a few, we're looking for a lot of these stocks to benefit, unfortunately, from the coronavirus outbreak. So this represents a potential value proposition, having pulled back from 119 recently down to 87.95 on Friday. Closed at 94.70. RSI is oversold and improving. This could be a decent opportunity this week. Maybe some option spreads as a potential trade. New Oriental Education. I think you're going to see a lot of these online education companies doing well. Last week we saw China online education bounce and pull back. This followed through for the most of the week, then sold off Thursday and Friday, but buyers did step up. So I'd like it better if this consolidated a little bit more along this 21-day moving average. We're also something similar on Luck and Coffee, holding at this level a hammer looking candle on Thursday, follow through on Friday, looking for Luckin to get back up into the 50s and build something of a cup support pattern here. Volume was above average on Friday, and RSI is above 50 and starting to rise again. We also saw some interesting price action in Nexstar Media Group, bouncing at the 200 period moving average, volume increasing, well above average for 2 days straight, Thursday and Friday, RSI rising. And like CLAC, KLA 10 Core, Intel, AMD, most of these bouncing. Intel should follow through as well, watching how these stocks fare over the next few weeks. Bouncing at the 200 period moving average. Paycom Software also bouncing. That needs to get back above the 21 day as well. RSI is rising. Maybe we get a follow through day this week or two. Maybe we get some bullish action to confirm. Also watching for something similar on Paylocity and Penn National Gaming if the gambling industry group picks up a little bit. We also saw stocks like RealPage announce earnings last week. This one in the management of rental properties, reversing handsomely. If you look at the weekly time frame on this stock, also looking very strong with a potential breakout zone overhead. Regeneron also bouncing at the 9 EMA. This one looks pretty good. Above average volume all last week. Some of you traded this one. Repay and other stocks in the payment processing group looking good, like Square. Ring Central holding at the 21-day moving average, buying all last week, showing relative strength when the market sold off. This one held up very well. Above average volume. Look for this one to follow through. A more favorite stock because of the price action. ServiceNow looking for a bounce, bullish engulfing candle, RSI rising, volume increasing. SiteOne Landscape Supply, also another name in the building supply and construction group that could conceivably bounce. We had buyers step up on Friday, looking for follow through and a move back above the 21-day. RSI should follow through. Some of the solar stocks like Solar Edge also look good, holding at the 21-day moving average, looking for a pullback to breakout bounce, RSI to rise, volume to increase this week. And Square showing really nice price action. I know Robert Kaplan traded this one in the live stream room on Friday. This did follow through. Payment processors looking very promising, as are stocks like Amazon, online fulfillment for orders for people that are afraid of going out, as the virus potentially could increase in severity. A lot of these stocks should benefit over the next few months. Teradyne also bouncing right near the 200 period moving average, oversold RSI and improving. Look for a follow through this week. Trade Desk, another favorite, reversal, 3 candle reversal right at the 200 period moving average on volume, RSI rising rapidly, showing institutions are picking up shares. TradeWeb showing relative strength as well. The market sold off dramatically. This one held near the 21-day, while Yandex did the same, holding right at the 200 period moving average, giving back 4 months worth of gains, but it could be a nice entry on Monday. Zito, another stock showing an ascending channel pattern, looking for a break back up towards the 25 level this week. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter, March the 1st, 2020. I'll send out a watch list later tonight around 11:30 East Coast and 8:30 on the West Coast. Be sure to look for that in your inbox. Otherwise, I hope this helps. Take care, and we'll talk to you soon.